I want to introduce you to my good friend Will Page, who's going to take it on from there. Thank you, Will.
So just to give everybody a quick run through on Ipg Global and who we are, because I think there's a good group of people that may not know too much about our business. So we were founded in 2005 by our current chairman, Tim Murphy. We're still headquartered in Hong Kong. We've got offices across Asia, the Middle East, South Africa, and of course the UK. To date, we've invested in over 28 different markets around the world to a total value of just over $3 billion US. Okay, so we've done a lot, and we've been been around a long time in the industry. Since 2009, the focus of the business, since after the financial crisis, has very much been low risk markets, mature markets. So that's really been where the business has been focused on in the last sort of 10, 11 years. Now, just in terms of how we work, we're very different to many other companies in the industry. We've got a very, very strong USP that we really do strongly believe in. And that is that we underwrite the opportunities that we bring to market, that we bring to our clients. So what the word underwrite means is that we are actually bulk buying into developments from developers, and those are the opportunities that we bring to our clients. So just to put it into a worked example, if I can, let's say it's London. We've found an area, a borough in London that we think offers really good value and has a strong investment case. Then we will try and actually approach developers in those areas and bulk purchase. It might be the whole scheme. Say they're building 100 apartments, we might try and buy the whole scheme, or we might try and take a percentage of. We financially and legally commit to actually buying all of those units that we take. So you can imagine that that's a very powerful model. Offers developers a very clean exit and a de-risk. And for our clients, it means obviously we've got skin in the game. We're invested heavily into what we're selling. We have to carry out obviously a huge amount of due diligence to make sure that we make the right decisions at the right times into these projects. It gives us access to the very best schemes at very competitive prices. And time again, by doing this and by using our research to think carefully about where we go, we've been able to achieve higher than average returns than the markets have been achieving. And one of the key things is that we can move quickly. So, unlike a developer that buys a piece of land and is kind of tied into developing it and selling that project to clients throughout a very long period of time, we're able to quite quickly move into different areas, different cities, different countries even, and source properties. So we're very flexible, and that gives us real strength. And then, of course, we're aligned to completions. The way that we make our money is that we buy in bulk, and we buy at a discount, obviously, and we operate a fairly simple wholesale retail model, but we make our money on completions. So a number of the schemes that we're getting involved in are where the projects are under construction, and we're aligned to our clients. We are there to help on completion and make sure that we get these projects delivered and get these projects rented out for clients. This flowchart just shows you the services that we offer. Obviously, the researching and the underwriting. We own a mortgage business, so we can help our clients achieve finance in the different markets we're active in. We have independent solicitors in all the jurisdictions that we're covering that can handle the legal side of the purchase for our clients. And then we own a big management company, which is called Complete Lettings, which manages the properties. It finds the tenants, places the tenants, even furnishes the apartments, and then actively manages those, collecting the rents month on month. So, it's a full end-to-end model to take the pressure off and take the hassle away from international people that want to get access to, real estate investments. And just in terms of our track record, we've been around a long time. We've been, we are one of the main players in the industry. You can see here that all of these schemes were underwritten projects. This is just our UK track record, and it's in date order. So you can see that most recently we've been investing in the regional cities, in the Leedses and the Manchesters and the Birminghams. But as you go back and as you come back to sort of 2015 and behind that time, you'll see that it was very, very much a big focus on London. So IP is London, and we're very, very pleased that after 4 years being out the market for good reason, that we've now taken the decision, and we believe that now is the right time to get back into the London market.
So as Will mentioned, obviously we were London, and haven't been for the last 4 or 5 years, but thankfully we're coming back, and as you can see, coming soon on the west side of London there. That's our new project that we'll be talking about later. But here's just a snapshot of the last 20 projects that we've underwritten and completed in London. What you'll see is, kind of going from the early stages, we were quite central in London, but as as we've seen that there's growth and there's the investment opportunities on the outskirts, kind of zones 3, zones 4, zones 5 of London, that's where we've really started to look at those the projects on the outskirts there. Now, we wanted to touch on the Brexit referendum. As we know, in June 2016, the results came through, and we all assumed it would be quite a quick decision. And unfortunately, what it did is it just created 4 years of uncertainty in the market. And when we talk about uncertainty, obviously there was a drop in pricing, certainly across the country, but prime central London saw quite a dramatic, kind of 8 to 15% drop in the pricing there. What you'll see on the graph we have on the bottom here is just a range of asset classes. So you have gold index, you have the FTSE 100, and also the London property. So you'll see that, obviously the financial crisis, 2008, 2009, you'll see how London really bounced back, straight off after that financial crisis. And that was something that, we are looking at right now. Obviously after this pandemic, we're looking that, London's going to recover quite quickly from there. Now, the dark blue line that you'll see is actually London property leveraged. So that's something that we do encourage our investors to do. Looking at mortgaging the properties to make the most out of your investments. You obviously see that there's quite a considerable gain on your investment over other asset classes.
Yeah, thanks, Michael. I think the big thing there is that we've got a majority government now. So before the pandemic, we were very keen to get back into London, and there was no doubt that the Boris movement was happening. People knew the direction that the country was going in, and things were looking positive. And then obviously we had the earthquake of COVID-19, but before that there was a lot of positive, a lot of positive things going on in the UK, and the property market was certainly, and the London market was certainly showing some shoots of growth.
And we do, when we're talking to our investors, and obviously they talked about that uncertainty during the last 4 years. And obviously with COVID happening now, people mention the Brexit and the COVID discount. One important thing to recognise is actually the currency opportunity. Now, a lot of our investors are here in the Middle East, and as we know, we're pegged to the dollar here. So I just wanted to give a bit of an example of, this really is a once in a lifetime opportunity for investors to take advantage if your currency, if you are in the dollar currency. So just as an example, back in June 2016, if you bought a property at £400,000, the rate then was at 1.58, so you'd be looking at $632,000. And actually, when we take a look now in June 2020, after the Brexit withdrawal and with the COVID-19 situation, actually the dollars would now be 1.26. So you'd be looking at saving £128,000 just on that one purchase alone. So, when people do talk about discount, that is real opportunity just in the currency alone.
Yeah, I think that's really important. I think, Michael, just to add on that this is another reason why I think London has held pretty firm, and we can think it will continue to do so, is that there's so much international money, there's so much foreign money in the UK market, especially the London market. So, we haven't seen, and I don't think you're going to see those international investors, looking to sell and looking to exit, because what else are they going to buy? What else are they going to do with that money? They're going to put it in the bank and receive literally no interest on that money, or they're going to bring it from pounds back to where it came from to dollars. It's just not logical to do that. So I think it's an opportunity to buy, but it's also one of the reasons why the market does hold firm during these times of crisis. So what's happened since COVID-19? Obviously it's been tragic what's gone on, and hopefully we're beginning to get somewhere beyond the main issues of the pandemic. But what the government put in place was very, very impressive. They put a huge financial package in place to support the economy. It was 10 times bigger than the package that was put in place for the last financial crisis in 2008. One of the key things has obviously been the government-backed furlough scheme. So employers could obviously put staff onto that program, and the government would pay 80% of those salaries up to a maximum of £2,500. So really that was for 3 months, and that's actually now been extended out to September, although the percentage of what the government are paying is coming down each month. But that has been a big support for businesses, and it's meant that a lot of companies have been able to, hold those big decisions about laying off staff, and we feel that scheme has really supported the economy and is definitely going to reduce the amount of job cuts that companies are being, potentially needing to make.
So moving on, when we talked about this London bouncing back, and we certainly saw that from earlier from the graph, and we saw that from the financial crisis, how London was the first city really globally to bounce back well from that. And there's a few key reasons why. Looking at the details at the bottom there, we've got the this is the amount of international investment that is built into London. This is from Q4 2018 to Q3 2019. So you can see there that London actually that's double the amount of any other investment in any other city in Europe. And this is even during a time of of uncertainty that we talked about. That's $24 billion, which has which been put into London. And when we take a look at the between over the last decade as well, it's still having the most popular global inward investment. And just taking a look at something like this, 4,110 projects which has been launched in London since 2009. So when we're looking at opportunities within the city, obviously we want to look at jobs, employment, but also growth in population. And this is something that the Office of National Statistics has given their their projections. And on that graph there, we're looking at 2018 to 2043. And on the left-hand side, so in 2018, you would have seen around 8.7 million people. And then moving forward to 2043, you're looking around 9.8 million people.
Sorry, Michael, I flicked on a slide there when I was looking at some of the questions that are coming in.
That's okay. I just like to touch on the employment rate as well. This is it's at a record high since the record started back in 1992. So not only is the employment at higher, it's following the population growth, which is also important for investors.
Yeah, and then just taking that a step further, just having a look at supply, really. We know there's a lot of people in London. We know that number is going up and up. So having at supply is important. The top right-hand graph that you can see here, this shows you, this is from the Greater London Authority, and this shows you the amount, the line shows you the amount of units that are being completed each year. That's the line on the graph. And then the straight lines that you can see are what the different London plans, the London housing plans, have put in place as kind of targets of what they need to be delivering to meet the current issues of supply. So you can see there's just a drastic difference. There's somewhere in the region of just over 30,000 units being delivered last year in 2019, and the current plan that was drafted and put in place in 2017 is aiming for 65,000 units to be delivered per year. So like anything in that we buy and that we invest in, supply and demand is key, and London is the ultimately just drastically undersupplied, as you can see there. And then on the bottom here, on the bottom right hand corner, you can see similar to what Michael was showing about the employment, you can see how the number of jobs created has been going up and up. You can see how the population has been increasing, and you can see how, yes, homes have been increasing, but how they're just lagging behind. So just two very powerful graphs to show you why people like London and why investors believe there's long-term growth in the market.
And this, when we're talking about price predictions, obviously, as we know that what's happening currently, it's becoming clearer kind of week on week, really. But it was great to see that the UK is opening up and they're doing viewings, and transactions are opening up, which is fantastic to see. In such a short period of time, which a lot of people thought it may go on to next year, but this is positive stuff. So what you see is on that graph there is actually you look at the housing price values over the past 5 years. The blue line is actually our predictions as IP Global. Through our investment team and our head office, we were looking at around potentially a 10% growth over the next 4 years. But it's interesting to see the two powerhouses. We have Savills and Knight Frank, that they're looking over their 5-year prediction actually greater than what we're looking at. So the consensus is that there isn't going to be any of these kind of 15-20% discounts, but obviously there is going to be a little bit of a dip this year. There's no doubt about that. But the recovery is going to be quick, and it's going to continue in an upward trend.
So this is a graph that we've put together. Actually, I'm not sure if we use the right color, red. It's a bit drastic, but what this shows you is it's the prices of the average London property, and the red boxes show you that the 10-year graph. So basically, what it's trying to show you is, if I can explain it properly, is that any year you bought from 1995 in London, 10 years on, that property has been up in value. So I think that's very, very powerful. So that just shows you, again, why London is considered a secure long-term place and a good hedge to put your money. And again, you can obviously see in the graph here how quickly London came back from the financial crisis, and has, it took only a couple of years to start getting above the levels that it was before. So, a very powerful graph there to show you the long-term investment case for buying for the long term in London. Okay, so just moving on. I've got our new project in front of us here, the Solarium, which is in Keybridge, which is Brentford. This is a new scheme that we've been looking at for a number of months, and that we've gone ahead and underwritten units in. So just a few of you that don't know the area, Brentford is literally just to the west of Chiswick, and you can see over the River Thames on the other side you've got Key and you've got Richmond as well. So it's an area that's up and coming. It's an area that still offers value, and it's an area that that we believe is going to see some good, steady, long-term growth over the coming years.
Just going into the areas, as we mentioned, some of you may not know, but it's right on what we call the M4 corridor going into London. So you have Heathrow, only 13 minutes away. But actually, there's something they're called the Golden Link, which is very important for any investors to know about. Over 200 multinational companies which are located in Brentford, and blue chip headquarters such as GlaxoSmithKline, Sky, Sega, Alliance as well. So it's a fantastic place where there's actually that regeneration, which is always important when you're looking as an investor. Is finding somewhere where there's still going to be some regeneration and growth for your property.
So just having a look at some of the key facts about the project. We've underwritten the top floor penthouse apartments in this scheme. So there's 32 apartments along the top. They've all got balconies. So they're very, very smart units with open space. Given the fact that we're all having to potentially, work from home a little bit at the moment, I think we've decided that outside space is a key element for the short term for tenants and people looking to live in apartments. This is zone 3 of London. It's 35 minutes by train into Central, so offers that connectivity to all the jobs located in the middle of London, and it's still a prime area. It offers value against the Chelseas, the Chiswicks, these areas that are just up the river. So there's lots, as Michael said, there's lots of employment going on, but also it's a very nice part of London to be. It's a proven developer that we've worked with before. Pricing. The units start from £361,000 going up to 550. And just some of the key points really in terms of pricing, we were one of the companies that before COVID-19 were very bullish on London and looking to get back in, and we identified this scheme as one we wanted to take. But obviously COVID-19 came along, and we waited while the lockdown was obviously on. So we've managed to renegotiate the pricing down on all the units by an average of £15,000. We're able to include a furniture pack for clients that buy with us in this project, and also we're offering a 30% discount on our sort of usual letting fees as well if clients use our letting and management service. So there's some strong points there to back up the investment case. And also, this is a fairly low risk scheme because the development is well underway and it's a conversion of an office block, and this is the top floor that's going on. Then it's very limited development risk here with this scheme. And completion is also not far away, so completion is Q1 next year. Importantly, there's a stamp duty increase coming in for international investors that's coming in April 2021. And this scheme will be delivered and completed before that date, meaning that you'll be able to save on that potential cost. If you were completing on something after April, then you'd have an additional 2% stamp duty as a purchase cost.
And Will, I just want to touch just on there. If you can just go back a slide. Obviously, we haven't got. We're going to have a few more images coming through, but where the development is actually right on what they call Gunnersbury Park and Pond, which is fantastic. And this is an opportunity for investors to buy a project that's overlooking green, overlooking a park area. We have a lot of developments, or there's a lot of developments in London that are, just these high towers that are facing each other, and you just see city, not rather than any green. This is a really good opportunity to have that and being able to have your tenants in place that are going to enjoy, as Will mentioned, Will working from home a lot more, and actually having that indoor-outdoor space is very important.
Yeah, thanks, Michael. And you can see on the map here, you can see where the Stellarium is, how close it is to the main line train stations as well into London. Right, so just to quickly mention, we said we talk about other opportunities. We feel London is a great opportunity now, but the wider UK is certainly an area that we've always invested in, and we will continue to do so. There's no doubt that we believe in the story behind Birmingham. There's High Speed 2, obviously, that's coming, which is going to link the city to London very, very well and reduce the commute down to 49 minutes. And there's a lot of companies that have been shifting, over the years have been shifting a large number of staff to the city. So Birmingham is absolutely a city that we believe in, that we will continue to invest in. And then moving up to Scotland, we've been looking at other opportunities, and we feel that Glasgow is a city that has a very strong economy, offers very good value, and has some very strong rental yields. So Glasgow, watch this space. We're certainly going to be launching a project or two. If we can find the right schemes at the right price up in Glasgow, then that will be a key market for us moving forward as well.